Ben, you think that these tariffs are actually a Sputnik moment, but for China, that they're going to embolden their stance toward wanting to do more domestic production and invention?
Right. When you squeeze people, they react quickly. And in the case of China, we've seen historically that when you squeeze industries, they look for self-sufficiency and to build domestic industries to support these. They were already on the way with China 2025, domestic manufacturing, smart, robotics, AI, chips, etc. One of our portfolio companies, BGI, a few years ago in the gene sequencing space, when squeezed by their U.S. supplier, went out and built their own gene sequencing machine over the last 5 years. So we think that this will galvanize local governments in China, provincial as well as academia, and then certainly the private sector to invest in these areas.
Although critics would argue they haven't really built anything as much as they've stolen it, or at least gotten technology shared. Is that a fair criticism?
Listen, there are legitimate issues here around technology transfer, IP protections that have to be addressed, but I don't think that a trade war to unilateral action to force this type of extreme pressure, as we call it in China, will actually have a reaction from the Chinese to bring them to the table to discuss these legitimate issues that need to go line by line.
Larry, you agree with that, or do you think the Trump administration's stance here might actually work?
Well, I think that Ben's upstream in the manufacturing area, Carl, and I'm more or less downstream in the consumer area. And I think looking at this from the point of view of U.S. investors, you can, and I think some of what Ben says, and I think you have to respect his opinion because he's on the ground, is going to be absolutely true, and I think it has economic logic. So what's a U.S. investor going to do? And in China, my rule is, in looking at China, you try to figure out what the government wants. And clearly, one of the policies of the government, and it's nothing new with Z, has been to encourage the consumption of goods by the Chinese consumer. The Chinese consumption is far less than consumption in most other advanced economies. That's the bad news. The good news is it's growing rapidly. And how do you benefit from that? I think two ways, and the stocks are telling you as a U.S. investor not to be worried. Tencent, which is facilitating entertainment and communications, which helps the consumption function, and then Alibaba, which is actually on the transaction end of the business. So if you look at the Chinese consumption function, in addition to having these two, basically what I would call investable national champions, you also have, and I don't think this is going to change, and nobody talks about it, is that the industries are, on the consumption side, relatively protected because Facebook doesn't operate in China, eBay pulled out of China, and Google, of course, doesn't operate in China.
Sure.
So they've got an open path, an encouraging government. I think the numbers for both of these companies are going to be strong. I can't wait to see the Tencent numbers because they're a 40% owner of Fortnite. So you can have all this political worry on one side and have a tremendous opportunity to invest on the other side. And I think that's the bottom line for investors, and that's what the market's telling you, because these stocks, Carl, are very, very strong.
I like it. To Larry's point, stocks here have held up and Shanghai has not. There's more reports today about them potentially looking at more corporate tax cuts, speeding up infrastructure spending. We know what they've done with reserve requirement. Do you think they're scrambling, or are they just taking this sort of at a pace and are looking at a long view?
Yeah, I don't think that the direct reaction in China is to the trade war. We were already seeing a downward spiral a bit on Chinese stocks over the last year or so. So I think really the reaction is looking at the U.S. stocks of Chinese companies, right? The listed, as we said, Tencent, Baidu, Alibaba, still holding strong. These types of businesses are built for the long term and are expanding globally at a pace unanticipated by a lot of investors, even in the United States. So I think that that the Chinese stocks aren't necessarily indicative of the trade war.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.